Hi students, how are you? I hope you will be fine. The next thing that we are going to discuss in the financial statement analysis is the concept of the operating profit ratio. We have discussed before that what is overall financial statements, how to read the financial statements, what is the concept of the ratios, why we need the ratios, and then in the ratios we are going to discuss, like we have discussed about the net profitability ratio or NP ratio. We have discussed about the gross profit ratio. Now the third thing that we are going to discuss here is the operating profit ratio. So operating profit ratio, the formula is very simple. That is the earning before interest and tax, or also called as the operating profit of the company divided by sales. If you remember, in the net profit ratio, here we have a net profit divided by sales. In the gross profit ratio, we have a gross profit divided by sales. Now in the operating profit ratio, we have a operating profit divided by sales multiplied by 100. Now some of the values we have used here. If you look at the first one, we have a sales, cost of goods sold. The sales improved from 90 to 100. The cost of goods sold was there, then the gross profit was there, 45 to 50. Now here the most important thing in this ratio is the operating profit, or what we say the earning before interest and taxation. The profit before earning and taxation was 36, but now it is how much? Only 33. If we just go beyond that, if you look at the basic, the sales improved. There are more sales as compared to the previous years. There was $90,000, let's say, in the previous year, but in 2021 it is 100,000. The gross profit was 45, but now it is 50. So situation was good. But if you go into the more detail, you have to see here the sales of the companies improved, the gross profit of the company improved or increased. But if we see here with respect to the operating profit, the operating profit was $36,000, but now it is only 33. Obviously, what is the reason? The reason is the expenses, the operating expenses, the administrative expenses, the selling and marketing or distribution expenses, the general expenses. So these are the main reasons. If you see here, the overall, the total expenses, including the administrative expenses, office expenses, selling, marketing, distribution expenses, and the general expenses, the total was only 9,000. But this year what happened? It increased from 9,000 to 17,000. It is, you can say, almost double. And it affected the operating profit of the company. The operating profit of the company reduced. Instead of $36,000, improved sales are there, more sales are there, but still the operating profit reduced. The reason is what? The reason is the expenses. Now, if we look at the values here, if we use the calculations here, so the operating profit was 36 divided by 90. So 36 divided by 90. Then this year operating profit is 33 and the sale is 100. If we just do the calculations, we see here it is 33% and 40%. Means again here the issue is the amount of the sales improved, the gross profit improved. There is a better gross profit this year, but the percentage of the operating profit reduced from 40% to 33%. Means last year company was earning almost 40% as the operating profit. After operating expenses, they were earning almost 40% or $40 out of 100. But this year they are getting only 33%, means almost 7%. And 7% is not a small amount, a small fraction. It's a huge decrease in the profitability. If the 7% profitability is decreasing, obviously it is affecting the profit for taxation, profit after taxation, and the last thing, which is the most important for the shareholders, the earning per share. So that is very important thing. So the operating expenses are more, and it affected the operating profit of the company. Now, what is the overall you can say the lesson from this. The lesson from this is there that the operating profits are depending on what? Depending on the operating expenses. Obviously there are other things are there, but the here main thing is the operating expenses. So how they are changing, we have to look at the reason why it increased from 9,000 to 17,000 immediately in 1 year. What may be the reason? The reason may be, for example, company may have started some new marketing campaign, and obviously marketing campaign or some administrative changes they have, or they may have purchased some new software for the administration, or they may have done some new renovations, or the depreciation is there. So we have to go beyond that. We have to go for the reason that why these expenses. So just looking at the values and we say, no, 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 this is the problem, the company's profitability reduced. Now we have to see that if the marketing expenses, for example, changes are there, or the general expenses changes are there, so what are the reasons? Is there any major office building purchase or marketing campaign is started, or there's a possibility that there is some new software they have purchased, or there is some other overall change in the company structure which increase the overall expenses of the company. So we have to go for that reason, that what is the major reason of the expenses changes. So if the marketing expenses are changing or the general expenses are changing, obviously their effect will not be immediate. The short term effect will not be there. Short term, obviously the reduction in the profitability is there, but they have a long term effect. The profitability of the company will be better in the future, but after 2-3 year marketing campaign, or they have changed the software, or they have shifted to the new building, so all these things will affect the profitability of the company, but not short term, in the long term. So we have not only to look at the values, but we have to look at the reasons that what is the changes. So that's why if you look at any statement, there are the major notes are there, the additional information is there. So every owner, every user of the financial statement, every manager, investor, banker, so while looking at the financial statement, they don't just look at the values, they just go beyond that. They have to look at the reasons, that what is the major cause of this change, why from 9 to 17, or why it reduced, or why it is increased. So this is the major effect. On the basis of this, obviously you can look at the health of the company. The health of the company, you will be able to understand. You will be able to understand or read the financial statement. If you can read the financial statement properly, you can judge the health of the financial statement by the ratios analysis, or by the horizontal analysis, vertical analysis, or trend analysis. So it will be very much beneficial for you as a student, and even for the investors, or even for the bankers. So it has a practical importance, so we have to go beyond that. I hope you have understood the concept, but still if you have any confusion, if you have any doubts, so you can ask me in the comment section. Thank you very much.